Today we're discussing credit card payments versus premium financing when it comes to flood insurance. So if you're an insurance agent or you're a property owner trying to figure out the best payment solutions for flood insurance, stay tuned in this video. Hello, my name is Chris Creed, president and owner of the Flood Insurance Guru, and today we are talking about payment options. We're talking about premium financing and we're talking about credit card payments. Which one of these payments is going to be the best solution for you when arranging payment solutions? So first of all, if you're not exactly sure what premium financing is, click up here in the corner and you can watch one of our other videos we recently did on understanding premium financing on flood insurance. So let's compare some things here when we're talking about premium financing versus credit card payments. You know, both of these are basically going to show where your policy is paid in full. Private companies generally are going to have what's called a minimum earned premium. This typically means that the premium finance company is going to require you to make a down payment amount of 20 to 30%, and then they're going to finance the rest for you, depending on the minimum earned premium. Now, remember, minimum earned premium is the premium that a carrier is going to keep if you cancel a policy midterm. So the lower a minimum earned premium is, the lower your down payment could be on a premium finance policy. This means typically when you see 25 to 35% as a down payment, could be low down to 10 to 20%. So it depends on the carrier that you're working with or your insurance agent is working with. So it's important to understand minimum earned premiums on payment options. Now, just like if you were to make a mortgage payment, you're gonna have an interest amount on a loan. Same thing on a premium financing agreement. It's basically stating that you're gonna have a certain APR on here. At the end of 2023, when this video is shot, what we're seeing on the market right now, on average, is about 12 to 15% in the market. Now, there could be some other fees, like an insurance agent may be charging a broker fee on top of that. There could be some other fees on top of that premium financing. I know, because recently I premium financed one of my insurance policies that had gone from about $2,500 a year to $10,000. And the down payment I had to pay was about 25%. And then I did 10 payment options after that. Now, a premium financing option may provide you with 11 payment options, 12 payment options, depending on the down payment. But this is going through a private company who is basically, in exchange for that minimum earned premium, is going ahead and paying the rest of the premium to the insurance carrier. And then you have an agreement with them where you're paying a certain amount every month. Now, when talking about credit card payments, here's some of the downsides. You could be taking up your credit availability. That's one negative impact there. It could also be maybe credit on a credit card that you need available for something else. You may have a different payment every month. Your interest rate may end up changing. Payments fluctuate. With a credit card, with a premium finance company, you may have the set payment amount every month, so you know exactly what you're going to be paying. The other thing with a credit card is the interest rate may be higher. Maybe you have an annual fee you have to pay on there. These are all things you want to think about. The other thing though is with credit cards, you're going ahead and you're paying that full premium on the credit card to the flood insurance company, and then you're agreeing to pay your credit card company a monthly fee as well. One of the benefits might be is you don't have that 20 to 30% down payment. So it could help you from cash flow standpoint. But you want to think about this when trying to decide between a credit card and a premium finance company. Remember, whether it's a national flood insurance program or a private flood insurance, credit card payment is accepted as an option for payment, but premium financing is not always accepted. So it's something else you want to think about there. So when comparing credit cards with premium finance, you want to think about monthly payments. You want to think about APRs, annual percentage rates. You want to think about fees. Are there hidden fees with either one of these when trying to select, is this an option? You want to ask your private flood insurance company if you're dealing with them, hey, do you accept premium financing? So these are some things to look at when comparing premium financing on a flood insurance policy versus using a credit card. If you're ready to take the next steps to purchasing flood insurance, click down in the description and click on the link for a quote, 3 simple steps. Step 1, fill out the form. Step 2, connect with one of our flood risk advisors. And step 3, pick the plan that best fits your needs. If you want to know more about private flood insurance versus the National Flood Insurance Program, click up here in the corner of this video and you can get a good understanding of the difference. My name is Chris Creed, president and owner of the Flood Insurance Guru, and I want to say thank you for tuning in to today's video on premium financing versus credit card payments for flood insurance.